Now we are going to start revising the residential status chapter, that is chapter number 2 in your institute study material. Residential status chapter is very important when it comes to the exam point of view, because for intermediate definitely a question is going to come from residential status chapter. Firstly, let us learn how to find out the residential status of an individual. To find out residential status of an individual, whether an individual is resident or not, you can find out using section 6 subsection 1 basic conditions. There are two basic conditions. If any one of the conditions is satisfied, the individual will be called resident. First basic condition, the stay in India should be 182 days or more in the previous year. Or second basic condition, stay in India should be 60 days or more during the previous year and 365 days or more in the 4 preceding previous years. However, for the second basic condition, there are 4 exceptions. 3 full exception and 1 partial exception. Exception means what? Who and all are covered under the exception need not see the second basic condition at all. If they satisfy the first basic condition, they are resident. If they don't satisfy, they are non-resident. Who are the exceptions? Number 1, Indian citizen who leaves India as a crew member of an Indian ship. Number 2, Indian citizen who leaves India for employment purpose outside India. So these two are the Indian citizens who are leaving India. Now let us talk about visiting India. If an Indian citizen or person of Indian origin is visiting India during the previous year and his total income other than income from foreign source is up to 15 lakhs, then they are covered under exception. However, if there is an Indian citizen or person of Indian origin who is visiting India during the previous year and total income other than income from foreign source is more than 15 lakhs during the previous year, then instead of 60 days, you consider 120 days in the second basic condition and solve the answer. Don't ignore the second basic condition. Instead of 60, you just put 120 and solve the answer. Next, who is deemed resident? Notwithstanding anything contained under 6 subsection 1. Deemed resident is given under which section? Section 6(1)(a). You need to satisfy 4 conditions to become deemed resident. What are the 4 conditions? Number 1, the assessee should be an Indian citizen. Number 2, the total income other than income from foreign source should be more than 15 lakhs. Number 3, he should not be liable to tax in any other country because of his domicile or residence or any other reason. And number 4, he should not be a resident as per 6(1). So if all these 4 conditions are satisfied, such individual will be called deemed resident. Now let us see additional condition to be R-O-N-O-R. Listen, first you have to find out whether an individual is a resident or non-resident. Fine. If an individual is coming as non-resident, then you see whether that non-resident is a deemed resident. Fine. If the non-resident is also a deemed resident, and in case of resident, so resident and deemed resident case lavande, you can have ordinarily resident, not ordinarily resident. How to differentiate between ordinary and not ordinary? Can a non-resident be R-N-O-R? Answer is no. Non-resident cannot be R-N-O-R. Only resident can be R-O-R or R-N-O-R. That is first point. Now, if a person is a resident, you see whether the person is satisfying any one of the 4 conditions. Any one of the 4 conditions. If he satisfies any one, he will be considered resident but not ordinarily resident. However, if he does not satisfy any condition, pavam, he will be considered ROR, resident, ordinarily resident, and he will be stuck and he has to pay the tax on the entire global income. So what are the 4 conditions? Section 6 subsection 6, condition number 1. The person should be a non-resident in at least 9 out of 10 preceding previous years. Condition number 2. Stay in India should be 729 days or less in the 7 preceding previous years. Condition 3. the person should be Indian citizen or person of Indian origin, visiting India during the previous year, and his total income other than income from foreign source should be more than 15 lakhs, whose stay in India is between 120 days and 182 days. It means what? 120 days or more, but less than 182 days. And lastly, deemed resident. So if any one of the four conditions is satisfied, the individual will be RNOR. If no condition satisfied, ROR. Fine. Now some special points. What are the special points? Who is a person of Indian origin, sir? Person of Indian origin means a person who himself or either of his parents or either of his grandparents should be born in undivided India. Undivided India means India before partition. So before the date of partition, India, Bangladesh and Pakistan, all the three countries combined were called undivided India. Now, what is income from foreign source? Sorry, income other than income from foreign source. Income other than income from foreign source means Indian income, that is income received in India, income deemed to be received in India, income accruing or arising in India, income deemed to accrue or arise in India, and number 5, income accrued and received outside India but from a business controlled and profession set up in India. So these 5 incomes are income that is other than income from foreign source. Okay. Next, residential status has to be determined every year. So every year you have to calculate residential status. Next, stay in India includes the stay in territorial waters. Since territorial water is also a part of India, it will include in stay in India. Continuous stay in India is not compulsory. So if a person is staying in bits and pieces, you have to add all the period of stay together and then find out the answer. Next, very important, date of arrival, it is considered as stay in India. Date of departure also considered as stay in India. Arrival day also India, departure day also India. You have to count it as stay in India. Next, individual can be resident in more than one country also. So is it possible that individual is resident in more than one country? Answer is yes, very much possible. In such case, what will happen? He might be taxed twice for the same income, correct? But in such case, he can take advantage of double taxation avoidance agreement. Next, concept of resident and citizen are different. In income tax, citizen can be a non-resident also, non-citizen can be a resident also. Because citizenship is by birth, but resident is by the number of days stayed in India. Totally different concept. Okay. Now let's come to Indian citizens who is a crew member of a foreign bound Indian ship. So if an Indian citizen is a crew member of foreign bound Indian ship, one special provision for them. What is the special provision? Firstly, we have to see whether they are on an eligible voyage. Eligible voyage means what? Voyage that is originated from port in India and destination is outside India, or originated from port outside India and destination is in India. In such case, the period excluded from the stay in India should be from the date of joining in CDC to the date of signing off in CDC. CDC means what? Continuous discharge certificate. It is nothing but a register. So when we enter into the ship, when the crew members are entering, they will join the CDC and then enter into the ship. When they are coming out of the ship, they will sign off from the CDC and come out from the ship. So this is only continuous discharge certificate. So from date of joining to date of signing off should be excluded from India. Excluded from India. Hence, this is the only case where date of joining and date of signing off both are considered outside India. It is not considered in India, it is considered outside India. Fine. So this is a special provision. Now let's come to residential status of HUF, firm, LLP, AOP, BOI, local authority and AJP. For all these persons, you have to see where is the control and management of affairs. If control and management of affairs is fully outside India, then the person is a non-resident. However, if it is fully or even partly in India, then the person will be considered resident. Okay? And in case of HUF, if the HUF is a resident, you also have to find whether HUF is a ROR or RNOR. How to find? If Karta is ROR, HUF is ROR. If Karta is not ROR, HUF will be RNOR, resident but not ordinarily resident. Now let's come to company. In case of company, non-resident company means other than resident company. Non-resident company na yaare? Other than resident. Then who is resident? Number 1, Indian company under section 2 clause 26 is a resident, and any other company will be considered as a resident if POEM is in India. What is POEM? Place of effective management. Place of effective management is in India. Place of effective management means the place where the key management and commercial decisions of an entity are made. Now let's come to scope of total income. Scope of total income only tells us why we are calculating the residential status or determining the residential status. It is because for a resident, ordinarily resident, the entire income that he earns in the entire world is taxable. However, for resident but not ordinarily resident, only Indian income and income accrued and received outside India but controlled from India is taxable, and for a non-resident, only Indian income is taxable. Fine. Now, what is Indian income? Indian income means income received in India, income deemed to be received in India, income accruing or arising in India, and income deemed to accrue or arise in India. These 4 types of income are called Indian income. It is taxable for everyone. ROR also, RNOR also, NR also. Taxable for everyone. Now let's come to the next one. Income accrued and received outside India from a business controlled or profession set up in India. This type of income is taxable for resident but not ordinarily resident. Resident but not ordinarily resident. Now, I also told you what is income other than income from foreign source. So, the first 5 will be considered as income other than income from foreign source. It means what? Income received in India, income deemed to be received in India, income accruing or arising in India, income deemed to accrue or arise in India, and income accrued and received outside India from a business controlled or profession set up in India. These 5 incomes are what? Income other than income from foreign source. This is only taxable for RNOR. Okay. Next. Lastly, income accrued and received outside India and controlled also outside India, and any other foreign income. Number 6 and number 7 are purely foreign incomes, and they are taxable only for resident, ordinarily resident. Taxable only for resident, ordinarily resident. Then we talked about remission. Remission means what? It comes from the word remittance. Remittance means sending the money from one person to another person. Remittance, is it taxable? Answer is no. It is not taxable because it is not earning the income. It is using the already earned income. So, if I am earning my money in Dubai and I am sending that money from Dubai to India, it is called remittance of money from Dubai to India. It is not taxable because I might have already paid the tax. Sir, what if I do not already pay the tax? Is then remittance taxable? Answer is no. Still remittance is not taxable. For example, if I am earning money in Dubai and if I do not pay any income tax in Dubai, later on, if the money is transferred from Dubai to India, which is remittance, is it taxable? Answer is no. Still it is not taxable because remittance is not taxable. Then in case of accrual or receipt, you have to see the first accrual or receipt. And next point paranga, receipt by another person on behalf of assessee will also be considered as receipt. Now listen very carefully. For example, if I am earning some income, okay, I asked my employer to directly send the money to my mother. Fine. Let's say I am working in USA. I am directly asking my employer to send money to my mother who is in India. In such case, my mother is receiving money. On behalf of whom she is receiving the money? On behalf of me only she is receiving the money. Hence, first time the money is received in India, it will be taxable in India since it is income received in India. Next, foreign income is not income accrued in India just because it is included in balance sheet in India. Listen very carefully. Sometimes what happens is foreign companies are there, no? They are required to make balance sheet in India. In that balance sheet, they should also include whatever foreign countries balances are there. For example, if a country is there in China as well as India, then in India they will have to submit their Indian balance sheet. They also have to submit their consolidated balance sheet. Consolidated balance sheet means it will contain India also, China also. Now, just because this balance sheet contains income from China, does it mean that it will be taxable in India? Answer is no. So just because one foreign income is mentioned in an Indian balance sheet, it does not mean that it will be taxable in India. Fine. Next, let's see what is the definition of India. India is defined in section 2 clause 25 of the Income Tax Act. It includes territory as per article 1 of the Constitution, then territorial waters, sea bed, subsoil, continental shelf, exclusive economic zone, other specified maritime zone, and the airspace that is above the territory and territorial waters. So this is the definition of India. Then let's see what is income deemed to be received in India. Income deemed to be received in India includes contribution to recognized provident fund greater than 12% of salary, interest in recognized provident fund greater than 9.5% per annum, employer contribution in pension scheme under section 80 CCD, and employer contribution and also interest that is transferred from unrecognized provident fund to recognized provident fund. Next, income accruing or arising in India. I already told you the difference between accrue, due and receipt. So if any activity is done in India by which an income is accruing in India or arising in India. For example, I did employment in India. Because of that, I am getting salary. That salary is income accruing or arising in India. I am doing business in India. Because of this business, I am getting the profit. This profit is income accruing or arising in India. Fine. There is a fixed deposit which is there in India. Because of that from that fixed deposit, the interest is arising. That is also accruing or arising in India. Then one small special point which might be asked in multiple choice question. If a non-resident seafarer also is like crew member of ship, not Indian ship. So if there is a non-resident seafarer, then if he is rendering any service outside India on a foreign going ship that is received in non-resident external account. NRE account means non-resident, please write non-resident external account. Then the salary is not taxable. So one exemption is given. What exemption? If there is a non-resident seafarer, it means what? A crew member who is not a resident and he is rendering service outside India on a foreign going ship. The ship is going outside India and he is rendering service outside India. That money is received in NRE account, non-resident external account. Such amount will not be taxable. Okay, so it is a very specific point. You have to by heart this point in case and there is a multiple choice question or something. Fine. Now let's come to income deemed to accrue or arise in India. So sometimes there will be a confusion whether there is an income it's accruing and arising in India or not. To clear the confusion, the government themselves have given the transactions in section number 9. So whatever is given in section number 9, they are income deemed to accrue or arise in India, and hence they will be called Indian income and taxed for everybody. Firstly, let us learn what is income through and from business connection in India. To learn business connection in India, firstly we should know the difference between business in India versus business with India. If a person is doing business with India, then there is just a shopkeeper-customer relationship. And in such case, the shopkeeper or the business need not pay any tax in India because he is just doing business with Indians. I gave you an example that we are going to US, buying iPhones and coming to India. Or we are ordering iPhones from US to India, so they are sending from their store to India. In such case, Apple is doing business with Indians. Hence, Apple need not pay any tax in India. Now let's come to business in India. Business in India means what? Apple company, they come to India, they open an Apple store and they are doing business here. In such case, on the profits of the Apple store, they have to pay the tax in India. Business in India, business with India. Now let's come to exception to business connection in India. So there are 5 cases where it will not be considered as business connection. First case is what? Operation not in India. If the operations are not done in India, such operations will not be called will not be called business connection in India. However, there are exceptions. What are the exceptions? There are 3 cases where it will be considered as operation in India. Operation in India. What are the 3 cases? Number 1, income from advertisement shown to Indian customer and Indian computer. Indian customer means whom? Customer who resides in India. And Indian computer means whom? Computer which is having internet protocol address or IP address that is located in India. So income from advertisement shown to Indian customer, Indian computer will be called operation in India. Number 2, income from sale of data collected from Indian customer, Indian computer will be considered as operation in India. And third one, income from sale of goods or services using that data to Indian customer and Indian computer will be considered as operation in India. So operation in India vande business connection, operation not in India vande exception to business connection. Next, if a person is purchasing for the purpose of export, it means what? Import pannite export pandrathu. Such transactions are not business connection in India. Next, collection of news or views in India for the purpose of transmission outside India. So transmission is done outside India for news and views collected in India. I gave you example of British Broadcasting Corporation. They are coming to India, collecting the news and showing in their country. Such case not covered in business or business connection in India. Next, shooting films in India where the producer is a non-resident who is a non-citizen, or in case of partnership firm, it should have no citizen partner, and in case of company, it should not have any citizen shareholder. In such case, if such people are coming to India and shooting the films, income from such films will not be business connection in India. And lastly, activity to display rough diamond in special notified zone for foreign mining companies will not be considered as business connection. Now let's come to the other cases where income is deemed to accrue or arise in India. So firstly, we saw business connection. Next, if there is a property in India, then income from such property will be income deemed to accrue or arise in India. இந்தியாவில் ஒரு FD இருக்குது, இந்தியாவில் ஒரு லேண்ட் இருக்குது, இந்தியாவில் ஒரு machinery இருக்குது. Whatever property that may be there in India, income from such property will be deemed to accrue or arise. Next, income from asset or source of income that is situated in India. So if there is any asset or any source of income which is there in India, such income will be deemed to accrue or arise. Next, if there is any capital asset situated in India, if you sell that capital asset, then the amount received on sales will be income deemed to accrue or arise in India. For example, there is a land, you have sold that land, then the income from such land, such sales will be deemed to accrue or arise. Next, salary earned in India. If a person is working in India and earning the salary will be deemed to accrue or arise in India. And one more special point, if a person is coming here and working, the rest or vacation period just before or just after the employment period will also be considered as deemed to accrue or arise in India. Even if you render service in India and receive the pension outside India, then such pension also will be deemed to accrue or arise. Next, if Indian government is paying salary to a Indian citizen for service outside India, then it is deemed to accrue or arise in India. I gave you an example, Indian diplomats who are working in foreign country embassy. However, for them, as per section 10 clause 7, perquisites and allowances, that is facilities etc. given to them will be completely exempt. Salary alone taxable, the perquisites and allowances will be exempt. Next, dividend by an Indian company outside India. If Indian company is giving dividend outside India, it is fully deemed to accrue or arise in India. First, let me discuss the last point. If money is paid without consideration means what, Kanna? It is gift, like a gift. If money is paid without consideration by a resident to a resident but not ordinarily resident, or non-corporate non-resident, or a foreign company, which is greater than 50,000 rupees, then such amount will also be deemed to accrue or arise in India. Then let's come to interest, royalty and fee for technical services, the last part of this chapter. Now, what is the meaning of royalty? Royalty means a consideration including lump sum consideration but excluding capital gains for transfer of right or license relating to a patent, invention, model, design, secret formula, process, trademark, etc. Then imparting information for using patent, invention, model, design, secret formula, process, trademark, etc. Number 3, using the patent, invention, model, design, secret formula, process, trademark, etc. So 3 points. Then fourth one, imparting industrial, commercial or scientific knowledge. Number 4, usage of industrial, commercial or scientific equipment. Then transfer of right or license relating to copyright work, literary work or artwork, including sale, distribution, exhibition of films. So if you sell films, distribute films, exhibit films, money received will be called what? Royalty. Then services relating to all the above will also be called royalty. Then what is fee for technical service? Fee for managerial service, technical service, consultancy service. Managerial is what? Leadership service or management. Technical means using the special knowledge, and consultancy means giving advice on the subject on which you are an expert. That is called consultancy. So all these 3 services are covered in fee for technical service. It includes the fee for providing technical personnel. I told you, if I am providing you technical service, okay, and I am sending my staff to your place to help you out, in such case, if you pay extra money for that staff, that is also fee for technical service. However, if you are having your own staff, it means what? Your own employee to whom you are giving salary. Is that fee for technical service? Answer is no. Salary is not fee for technical service. And lastly, fee for technical service does not include consideration for construction, assembly and mining. Now, taxability. How to consider it as deemed to accrue or arise in India? All the 3 cases we are discussing interest, royalty, fee for technical service received by a non-resident. Non-resident receive panna enna agapodhu? If government is giving to a non-resident, then it is always deemed to accrue or arise in India. If a resident is giving to a non-resident, then it is deemed to accrue or arise in India, but there are 2 exceptions. 2 exception kuda illa, 1 exception e sollalam. Very very simple. Enna exception? If the resident is using the interest, fee for technical service and royalty outside India, means outside India business பண்றதுக்காகவும் யூஸ் பண்ணலாம், they can use for business outside India, or they can also use for any other income outside India. If they are using outside India, then it is not deemed to accrue or arise in India. Then lastly, if a non-resident is paying interest, royalty, fee for technical service to another non-resident, generally it is not taxable, not deemed to accrue or arise in India. However, if the non-resident is using the money borrowed or fee for technical service or royalty for business in India, then it is deemed to accrue or arise in India. And in case of only fee for technical service and royalty. If the person is using for making any other source of income in India, then it is deemed to accrue or arise in India. Here only I told you to be careful about one point. What point? In case of money borrowed, that is taking a loan and paying interest. Okay, in case of money borrowed, if a non-resident is taking a loan from another non-resident, using in India for earning any other source other than business income, then it is not deemed to accrue or arise in India. I gave you example. Mr. Trump borrowed 1 crore rupees from Mr. Biden to invest in Indian company shares and earn dividend. Okay, then interest paid on loan will not be deemed to accrue or arise in India, because business income kadayade, it is other source of income. Then last point, there is no territorial nexus required for interest, royalty and fee for technical service to be deemed to accrue or arise in India. It means what? It is not at all necessary that the non-resident should stay in India, the non-resident should receive it in India, or non-resident should have any place of business in India. Without that also it can be taxable in India, because we should not see the territorial nexus, we should see where the money is being used, or royalty or fee for technical service is being used. Okay, so with this, residential status also over. Now I want you to clap your hands, because you listen so patiently. Continuous.